What we're seeing in the banking sector is the market is sussing out those companies that perhaps took on a little too much risk due to a lack of regulatory oversight. They're challenging their business models. And I think that's going to continue with the regional and smaller banks. But when we zoom out a little bit from those banks, looking at the globally systemically important banks, they're actually well regulated, they're liquid, they've shown through their earnings that deposits have stabilized, and they're growing their net interest income. So that gives me some comfort around the banking sector as a whole.
You're not at the moment expecting a US recession in 2023, or that's not the way you're positioning at the moment. And I think that's unconsensus this week. The whole market's coalesced around the idea a recession is coming, apart from maybe Jerome Powell's a little bit more optimistic. I'm curious to get your take. Why no recession? What's the thinking behind that?
Thanks, Mark. Well, the Fed has paused. That's already a very good sign. But also, looking at inflation, I think that's actually going to come down quite notably in the second half of this year. If we look at goods, the supply chain pressures that we saw previously have largely dissipated. That's going to bring down the price of goods even further. And looking at the services sector, for example, and wages, we've already seen signs from the JOLTS data earlier this week that the job market is cooling, and so we should see some relief from that wage pressure as well. I'll also mention here that the consumer is extremely resilient. So I certainly think that we can avoid a recession for 2023, and I'm in agreement with Jerome Powell on that point.